The news broke overnight about the much anticipated failure of the third big bank. First Republic has fallen, and gold and silver don't seem to give a rat's rear end. I'll explain why in this video as we explore. Gold and silver are both down today, but I watched it earlier in the morning when the markets opened up. In fact, it has been predicted that what happens is the markets kind of fall overnight, and then in the morning when they open up in New York, they go up. It's kind of a liquid situation, and Liquid Electrum knows, as he's the one that made that prediction, and he was exactly right. But the collapse of First Republic Bank is showing some turmoil, is not over yet. But is it? I don't know. It's hard to say. We really can't predict the future. We hear that these are regional banks, but then at the same time, they say this is one of the largest that we've seen in the history of the United States, largest bank failure. We're going to be reporting here from referencing Kitco News on this, and we'll talk about it from a couple different angles here about gold and silver and how they really did not really care about what the markets did today for a couple of different reasons here. This year's third banking failure didn't shock the markets, pushing gold above $2,000 an ounce only for a short period of time on Monday as traders focused on Wednesday's Federal Reserve interest rate announcement. That's what's making news for gold and silver. They don't really care about what's happening with this bank failure, apparently. 3 of the top 30 U.S. banks have failed in less than 2 months, yet the gold market barely moved in reaction to First Republic's collapse and news of J.P. Morgan buying most of the failed bank's assets. Keep in mind that it was other banks like J.P. Morgan that had already put money towards First Republic. And this has been talked about for a couple of weeks that we thought this was going to happen. Well, it looks like it has. This weekend, First Republic was seized by the government, and the company's assets were auctioned off. J.P. Morgan, PNC Financial Services, and Citizens Financial were asked to submit offers. This comes after a weekend auction for First Republic following the government seizure of the troubled bank. During the auction, banks including J.P. Morgan, PNC, and Citizens Financial were asked to submit those offers, and the collapse of First Republic Bank really is no big surprise. It had been teetering on the edge since severing $100 billion in deposit withdrawals, mostly in March. But it's a timely reminder that banking turmoil will continue to flare up periodically, according to Capital Economics chief North American economist Paul Ashworth. So First Republic Bank was the 14th biggest bank in the country with assets of close to $230 billion, slightly bigger than Silicon Valley Bank. So yes, a bigger bank than Silicon Valley Bank, and a lot of it was, you guessed it, because they had been giving out these mortgages to people who couldn't afford to get them. Does that sound familiar? We've been here before as well. In return for the buyout, J.P. Morgan will get a credit line worth $50 billion from the FDIC. Well, isn't that nice? They'll get this big old new credit line, and they'll just become even bigger. And so First Republic is joining the list of the biggest bank failures out there. And, we saw Washington Mutual, which had $307 billion and $188 billion in deposits, the only institution bigger than First Republic. So J.P. Morgan Chase and Jamie Dimon said Monday that the views of the takeover as the end of the panic for the banking system, this part of the crisis is over, he said during a conference call on Monday. There are only so many banks that were offsides this way. There may be another smaller one, but this pretty much resolves them all. That's what Jamie Dimon said. So when you think about that, he might be right. We have to think about it. Now, many of us, we hear what this guy says about it, the owner of the biggest bank out there, saying that this is pretty much over now. And we're like saying, well, yeah, of course you're going to say that. You just bought up. You just got yourself You're an even bigger institution now. You just became the CEO of yet an even bigger institution, become even more important when we're seeing things like this from these regional banks falling. But you know what? There is no other talk of any other bank happening, falling right now. When Signature Bank fell, there was rumors out there about First Republic, and has been rumors about it happening ever since then for a couple of weeks. Well, finally it happened. I'm not hearing about it from any other institution near that size. It is striking that even though the Fed's emergency lending hasn't expanded any further after the initial crisis in March, use of the Fed's discount window remains extremely elevated. In addition, banks have apparently been tapping the Federal Reserve loan banks heavily, according to Ashworth. The core of the crisis remains unresolved, and there's an outflow of deposits as savers look for higher returns amid increased interest rates. And where are they going to go? They're going to go to the big banks like JP Morgan because they're, quote, less likely to fall. Or, as remember the old phrase, is too big to fail? Yeah, we'll see how this works out. The failure of First Republic points to a pattern and the consequences of the Fed raising rates too quickly, said Great Hill Capital Chairman Thomas Hayes. That's on the eve of them getting ready to raise rates yet again, another 25 basis points. With cash on hand already dwindling, the decline in deposits, particularly in small banks, where the lack of blanket insurance is an additional problem, and we already have a statement from the Secretary of the Treasury, Janet Yellen, that they're not going to bail them out. That squeeze on bank credit will add to the headwinds on gross domestic product growth at a time when the economy is already appearing to be slowing. When it was just SVB, it was easy to blame management. However, now that we see the pattern, it is evident that the Fed has moved too far, too fast, and is breaking things, Hayes said. Of course, some people feel, and I am one of those, I think they should have raised rates probably a year before they started, and maybe do it at a slower pace, perhaps, but still, now they're trying to catch up, and of course, now it's catching up to them. Indeed, so we'll see here. We would not be surprised to see a pause after this final hike. Markets should take today's news in stride, knowing that the repeated bank failures should now have the Fed back on its heels and defanged, moving forwards. So, likely we're going to see this 25 basis point hike, but he's saying that they should pause after that. No more. Right now, the general consensus is, at least before this failure, is that there would be one more after this. So 2 more rate hikes before there was a pause. But, I don't know. But I'm of the feeling that it's probably likely this one may be it. We'll see here. On the other hand, the concerning comments from Federal Reserve Chair Jerome Powell on what the Fed thinks about the banking sector could renew gold's momentum. Gold prices in particular have been on a gradual incline for much of 2023 so far, with such worrying indications of more stress in the banking sector can be viewed as a potential catalyst to add the needed fuel to the rally that has run out of fumes in recent weeks, according to Jamel Ahmed from Compare Broker. Another risk to consider is that many global markets still need to digest First Republic news because they were closed on Monday for public holidays. Confidence in the banking sector has now weakened further, which means that investors should expect for financial markets to remain on the defensive. One possible downside for the gold market is the Fed sounding more hawkish than expected, and given the recent boost in inflationary pressures, the Fed might hold off in signaling that they are ready to hold rates steady after one more hike. The Fed may choose to remain vigilant, and that is something this market is not ready to price in. So it could be a pretty wild time after Jerome Powell makes a statement here in the coming days. So it'll be very interesting. But right now, they are expecting a rate hike at 25 basis points. So the markets are reacting now. And U.S. data has lifted the dollar. And this is part of what we're reading now from Reuters. It talks about what's happening here. U.S. manufacturing pulled off a 3-year low in April as new orders improved slightly and employment rebounded while construction spending increased more than expected in March. boosted by investments for non-residential structures. The stronger than expected data knocked down the metals market and boosted the dollar a little bit, according to Jim Wyckoff. The dollar index gained 0.5%, making the greenback price bullion less attractive for overseas buyers. This is going to be bullish on a rate hike coming, and could mean that we should be open to potentially more rate hikes to come, or at least one more after this. But we'll see. It's a delicate balance for sure as we weigh all of this information to see what the Fed is going to say and do, and that's going to have a pretty big impact, I think, one way or the other for gold and silver. My prediction is that gold and silver and the Fed's statements is that likely they will probably pause next time, and there will be hints of that with Jerome Powell's statement, which means that gold and silver will go up from here. That's what I'm predicting. Now, I could be very much wrong on it, and we'll see. But I think if he indicates to the other side and that they will hint at raising rates yet again in June, I guess, or July, then I think we're going to see gold and silver go down, and we may see it puncture through the support. And right now, the support for silver is right around $25. In fact, right now it's down a dime, and it's below 25 in the bid price, $24.95, $25.05 for the ask. Silver, gold though, however, is down almost $10. It's at $1,981.90. So we'll see. It's going to be a very interesting week ahead, and we're going to be here to watch it all and see what happens with gold and silver. But so far, it's a matter of just holding strong, and we will continue to do that with gold and silver. Let me know what your thoughts are. What do you think it's going to do in the next couple of days here as the Federal Reserve hints with their statements? I'd like to extend a multitude of gratitude to you all for watching, and let me know what your thoughts are in the comment section below, and please rate, share, comment, and subscribe.